Okay, it's Tuesday the 24th of May, about 25 minutes until the Ftse opens. First of all, I'm heading over to Monaco on Thursday, so there'll be no updates on Sunday or next week. Okay, so this market really is in a very tight consolidation range. Basically, back in March, we chopped sideways, really from 6220 down to 6060 now. We broke up, we came back down again, we broke up into key levels, and we've came all the way back down into this consolidation range, and now really we are in a consolidation range within a consolidation range. You can see price action is very, very tight in here. For an example, the ATR is sitting at 52. If we come back here somewhere, you can see it was all the way up at 67. So it's a very, very tight range now. I've already went over how potentially we are looking at head and shoulders. Now, one of the main reasons this is my preferred way to look at this market right now is purely because, well, first of all, this is very strong resistance up above. We failed here after we went up. Secondly, because if the market can get through these levels down here, really you're looking at 6,000 now, just slightly higher. There's not a lot of support. We're coming into the EU referendum. The EU referendum is going to bring some uncertainty. Even if the polls say it's very likely that we're going to vote Remain, which is completely what I expect to happen, it's still an uncertain time, and markets don't like uncertainty, so most likely money's going to come out of the market. So first thing is, I do not expect this market to remain in this consolidation as we approach the referendum. It's almost guaranteed that that's not going to happen. I'm looking for it to break down. However, as long as we remain in this area right here, I'm more than happy to just keep doing what I've been doing, what I've been telling subscribers to do. Just trade it exactly as it is playing out. Quick look on the 4 hour. You can see the market's just coming down, bouncing, coming up. It's really now bouncing in this area here, 61 sort of 66 levels. We had the false break up. The false break up went straight into the key levels up here, which were the top of the range last time. Came down, came back up, did it once again, false break, came back down, pushed up into the 6066s, and we are now coming down once again. For me today, well, first of all, if we get a day like yesterday, let me just shrink this down. This is yesterday's price action. In the morning, we had a bit of movement, and then after that, we just did this all day. If we see this again, likely I'm not going to trade today. Really, my preferred trade, if we can see it, or if we see it, sorry, is in the morning. If we can push up into this level here, I'll be looking to sell the market. Apart from that, really, it's only the strong levels that I'm going to be interested in down here. And, sorry, excuse me. Up above also, this has been the top of the range. And the top of the overall larger range has been these two areas here. So today, this is really what I'm watching. I want some good price action to get into a trade, and I don't want the market to be chopping sideways in a very tight consolidation. With basically yesterday it was a consolidation within two of these zones. We had identified a zone up here, somewhere up here, and we'd identified a zone somewhere down here, and the market just sat in between it and did this. You know, it's not ideal to trade when the market's doing this. Really, we want to see some good clean price action, and we want to see the market with, you know, some momentum. We don't want very, very tight ranges. Okay, so I'm going to come back at 4:30, have a look at the Ftse, and go over exactly what it did. Okay, so the market has opened. It's actually opened relatively slow. The drop-off has been not as strong as we usually get with the Ftse opens. We've only seen a move of about 13 points. We may be going to see a relatively quiet day again. And we've dropped down right into this zone, and then we've shown a pin bar, which for me is the signal to get in. Really, all I'm looking to do here is get it up towards this zone here. Relatively tight management because the market has been so slow yesterday. So, you know, I'm not expecting any massive moves. I don't want to hold on for any very large moves. I've already made my target for before going on holiday, so I'm trading slightly lower risk, sorry. And we'll just see how this one goes. But that's basically what I'm looking for now. I'm just looking for the market to pop up anywhere up into these sort of areas here, where we can see we've had resistance. You've got to be a little bit careful in the mornings as well, because we've broken down these lows here. You tend to find in the morning they can create a little bit of resistance. So, you know, your overnight highs and lows, you always want to watch them. You always want to be a little bit careful. It's always better to be overly cautious when trading, in my opinion anyway. This is something with trading as well. With trading, the vast majority of your work comes when you're setting up and when you're analyzing. So this morning and last night, you know, when I was going over the market, looking at the market, the zones were created. And then when you come in the morning, really all you're doing is following on from that. And then you're looking to implement your plan at your trading areas. But the vast majority of the work should be done before the market even opens most of the time. Sometimes it changes when the market is open. You know, if you start seeing things like lower highs or double bottoms, or you start seeing price squeezing, that allows you to update your analysis and just sort of be a little bit more careful. And perhaps if you're going to take a sell position and you've just seen a very strong double bottom, you'll hold off for clearer signals. But really, for me, the way I trade, everything is set up before the market opens. And then when the market opens, all I'm doing after that is looking for my signals, looking for specific ways the market reacts. And if I see that, that's how, that's my reasons for getting into the market. But the main way to do it is to have your support and resistance levels ready to go. And then that allows you to pay a lot more attention to the actual market. You get a lot of people who try and analyze the market as it's forming and pick out the support and resistance levels as the market is, printing candlesticks. It's a lot more difficult. It's a lot easier to miss things if you're doing that. So I'm just watching now at this rejection at these levels right here. And I'm just going to watch and see how the market reacts. All I'm doing is I'm just watching this market. We pushed up, we've had another candle which is pushed up and then rejected. Still in the trade right now. I really want the market to now break back above these levels here. So all I'm doing is watching how the market reacts. So we're seeing, once again, very slow price action here. It's basically continuing on from yesterday. Yesterday was a very, very slow sideways day. What I'm doing really is I'm just watching the market. You know, a lot of people, when they see the market doing things, they're in a trade, they'll see this candle being red, and they'll want to get out. But you need to let the market give you concrete evidence that you need to exit a trade before you exit. What you've got to remember is when you're looking at candlesticks forming, the entire time you're looking at a chart, all you're looking at is people buying and people selling. You know, it's never completely in harmony. There's never only buyers, there's never only sellers. So candlesticks are going to jump around. All you're seeing is if it's moving down, the sellers are stronger. If it's moving up, the buyers are stronger. But you know, your trade is looking for the overall sentiment. So I'm looking for the overall strength right now to be with the buyers. That doesn't mean that it's only going to move up. It's going to rocket up, and that's going to be my trade completed. You need to be managing it in a sensible way. So this candle right here spiked up and then closed back below the key levels at 6120, slightly negative, but it's not enough for me to get out. So I wanted to wait for the next candle, which is this candle, which is currently breaking up. But I'm not going to exit on this candle if it's pushing down slightly. After you see this candle, you know, it's telling you that there's likely going to be sellers coming in, but you want to wait for the full candle to form so you can see the strength of the sellers, basically. You know, and all I've done is waited. The sellers have tried to push this down, they've failed, and the market is now pushing up. So really, we're now into the levels where I'm managing this trade. It's been moving very slow. I'm probably going to take, you know, sort of 13 to 15 points on this. Okay, so there we go, 15 points. Nice early morning trade. Really, the thing to take out of it, if you are trying to learn, you know, how to manage trades and stuff, it's just purely the way to look at the market as it's trading. You know, this does not mean exit your trade. All you're seeing is price trying to push up and then rejecting. However, you need confirmation after this before you can look at this market as negative and moving against your trade. All I did was I waited. You see this candle right here, tried to push down. It could not break the low of this candle right here. And then it has pushed back up again. I got out slightly early. Really, this was my target. However, with the support and resistance level being right here, and with the market moving very slowly, I was happy to get out of this at 15 points. You know, it's 75% of my stop level, which is absolutely perfect for me and this trade. Okay guys, I'll come back at 4:30 and go over the market, but likely that is me finished for the day. In fact, it's definitely me finished for the day. So, you know, 8:26, not a bad working day, and I will speak to you at 4:30. Okay, it's 4:45 and the Ftse is now closed. So the first thing we can see is we have had a very strong up day. It came on the back of polls which are basically suggesting that the Remain camp are doing a lot better than the Vote Out camp in regards to the EU referendum. So let's have a look at the price action on the 5-minute time frame. As we can see, and also from the trade earlier, you know, it really doesn't matter what the market does. If your trading plan is sound, it really should work in all markets. So we came down into this area here, which has been the bottom of the range. Back here, the 6100 level to the 6120, which I mentioned, and then we had the 6066 level, which was below. The market came down into this level once again and has pushed off. And you can see for the rest of the day, basically, we have just continued our way all the way up. A little bit of reactions at the zones, nothing very strong, and we crashed through R3 also. For everyone who's done the training course, days like this, when you're making sustained rallies like this, very strong price action, this is exactly when you should be waiting for the market to slow down and give you that evidence before entering into your reversals. How to do it, it's all in the course, so hopefully you took heed of that today. Basically, that's the only trade that I took today. I took the buy position. First thing I can see is that I got out way too early. I mean, well, clearly you can see how far the market has gone up. However, for me, it was still a good trade. I got my the points that I wanted. The market was moving very slow, and it was coming into areas which for days and weeks the market has been rejecting off of and bouncing off of. So I was happy to take the profit and finish the day. That's really all there is to go over for today, guys. It was a very strong, sustained up day, and there's not much more that I can really go into. So hopefully that was helpful. Just to mention again, I'm on holiday next week, but I will be back after that with the review videos. Okay guys, I'm James Orr, and thank you.